Welcome to Wealth for You. Before we dive in, let me ask you, do you know what dividend investing is? Are you frustrated with investments that barely move the needle? What if I told you there's a way to earn money while you sleep? Imagine sipping your morning coffee, knowing your investments are working harder than you are. Sounds like a dream, right? Well, it's not. It's called dividend investing. Have you ever considered how dividend investing can benefit you? In this video, we'll break down what dividend investing is, how it can provide steady income for retirement, and how much you need to get started. Stay with us until the end because the last point could completely change how you plan your financial future. And hey, if you find value here, don't forget to subscribe and hit that like button to support the channel. Ready? Let's dive in. Here's what we're covering today. 1. What is dividend investing? 2. Are dividends a good investment? 3. Why does dividend investing work? 4. Can dividend investing make you rich? 5. How much do you need to invest in dividends? And 6. The power of delayed gratification and patience. Stick around because this video might just shift your entire perspective on building wealth. Segment 1. What is dividend investing? Dividend investing is buying shares of companies that pay you a portion of their profits regularly, just for holding their stock. Think of it as earning rent from your investments. Imagine investing in Grandma's bakery. If you own part of her business but never receive any of the profits, it feels off, right? But if Grandma sends you a fresh batch of cookies or a slice of the profits every quarter, now we're talking. That's what dividend investing is like. Did you know 40% of the S&P 500's historical returns come from dividends? That's almost half the gains just from dividends alone. Focus on companies that consistently generate profits and share them with their shareholders. Companies like Chevron have reliable dividend yields that make them stand out. For example, Chevron has a solid dividend yield. When analyzing dividend stocks, look at their payout history, stability, and growth potential. Segment 2. Are dividends a good investment? Not all dividends are created equal. A strong dividend comes from a company with rock-solid financials, consistent earnings, and a competitive edge in its industry. Think of it like picking fruit. You want the ripest, healthiest options, not the ones that look good on the outside but are rotten inside. Look at companies like Coca-Cola, Procter & Gamble, and 3M. These are known as dividend kings and dividend aristocrats because they've not only paid dividends consistently but have also increased their payouts year after year for decades. That's the kind of stability and reliability you want in your portfolio. Sure, dividend yields might seem small at first glance, but here's where the magic happens. Reinvest those dividends, and over time, they compound, turning small streams into rivers of income. It's the snowball effect. The longer it rolls, the bigger it gets. Segment 3. Why does dividend investing work? 1. Cash flow focus. Dividend investing works because it provides consistent, reliable income without the need to sell your shares. Unlike growth investing, where you often have to cash out to realize gains, dividends offer a steady cash flow that keeps coming in, rain or shine. That's the beauty of true cash flow. 2. Tax advantages. In the United States, qualified dividends are taxed at favorable rates compared to regular income. This means you keep more of your earnings, making it an efficient strategy for long-term wealth building. It's like getting a financial bonus just for being a smart investor. 3. Infinity investing concept. Picture this. You buy quality dividend stocks, hold them indefinitely, and they keep paying you year after year. Not just for your lifetime, but potentially for your kids and even grandkids. That's what we call infinity investing. An investment that keeps giving for generations to come. Segment 4. Can dividend investing make you rich? Not alone, but crucial. Dividend investing alone might not make you a millionaire overnight, but it's a powerful cornerstone of a diversified wealth strategy. Pair it with other income streams like real estate, royalties, and capital gains, and you've got a formula for financial success. Think of it as one pillar supporting your financial house. With dividend investing, you can literally earn money while you sleep. Those consistent dividend payments act like an automatic paycheck that doesn't require you to clock in. Your wealth grows quietly and steadily in the background, with minimal effort on your part. Imagine owning shares of companies like Chevron or Coca-Cola. They're not just brands you see every day. They're wealth machines that pay steady dividends year after year. Over time, these payments can cover everything from your morning coffee to your retirement expenses. It's like planting a tree today and enjoying the shade for decades to come. Segment 5. How much do you need to invest in dividends? 1. Low barrier to entry. The best part about dividend investing? You don't need a fortune to get started. With just the price of a single share, around $63 for Coca-Cola, you can begin building your passive income stream today. Investing has never been more accessible. 2. Compounding effect. Dividends aren't just about earning money. They're about making your money work for you. By reinvesting your dividends through a dividend reinvestment plan, or DRIP, you can harness the power of compounding. Over time, your investment grows exponentially as dividends buy more shares, which in turn generate even more dividends. It's a snowball effect that turns small contributions into significant wealth. 3. Historical growth. Think long-term. Since the 1980s, Coca-Cola has not only paid dividends, but has consistently increased them. That's the beauty of dividend investing: reliable, growing income that can support you for years to come. Investing in strong dividend stocks today could mean securing a steady financial future decades from now. Segment 6. The power of delayed gratification and patience. Delayed gratification is the ability to resist the temptation of an immediate reward in favor of a more valuable reward later. In investing, this means prioritizing long-term gains over short-term pleasures. Consider the famous marshmallow test, where children could eat one treat now or wait to get two later. Those who waited often did better in life. Similarly, in investing, patience can lead to greater financial rewards. Dividend investing requires a long-term perspective. Reinvesting dividends and allowing them to compound over time demands patience, but the rewards can be life-changing. Imagine investing in a solid dividend-paying company. Initially, returns may seem modest, but over the years, consistent reinvestment can grow your wealth exponentially. Patience and delayed gratification aren't just virtues, they're wealth-building strategies. Conclusion. Dividend investing is one of the most powerful and sustainable ways to build long-term wealth. It provides consistent income, tax advantages, and the ability to grow your wealth exponentially over time. By focusing on strong, reliable dividend-paying companies, you can create a passive income stream that supports you for years to come. If you found this video helpful, don't forget to subscribe to Wealth for You. We create content designed to help you achieve financial freedom, and your support allows us to keep bringing you valuable insights. Also, give this video a thumbs up to help more people discover these wealth-building strategies. And if you know someone who could benefit from learning about dividend investing, share this video with them. It might just change their financial future. Final thought. Remember, cash flow is king, whether it's from dividend stocks, real estate, or other income-generating assets. Start small, stay consistent, and let time work its magic. Your future self will thank you. Thanks for watching, and we'll see you in the next video.